Hey everyone, welcome to a new episode of the AI Best Business Show. The show where you learn about investing, startups, tech, entrepreneurship, and anything business related. Today with me, I have Ali. He's one of the investors in the region. Great career, great portfolio. Started different syndicates, different funds. Ali, welcome to the show.
Thank you for having me.
Uh, here's let's deep dive into what do you do right away. Uh, how did you start your career as an investor?
Yeah, so I think there's a little bit of background before I became an investor. I started my career in London,
Okay.
um, totally unrelated to investing, as a sort of a corporate lawyer, and I wanted to move back to the region because I wanted to have a bigger impact on my community.
Okay.
So that was a really big pull for me. In addition, also to the opportunity I could see in building my practice in this part of the world, it was much more exciting for me. So I moved back, and I then had a bit more time and a little bit of money to be able to invest. And but there weren't any platforms or any way to really get started. Okay, and I think so. The starting point was not finding a way to start. But fortunately, I bumped into somebody, a like-minded person that I didn't know at the time, called Aly El Shalakany, who had also worked abroad for a long time and decided to move back to Egypt, also because of the right reasons, the opportunity, and we could really see that they could have a positive impact on their society. And together we decided to co-found the first angel network in Africa and one of the first ones in the Middle East. So that's kind of how we got started. It was really a little bit by chance.
When you speak about something there's a lot of opportunity in the region, as in the MENA region. There's a lot of opportunity, a lot of people uh, that move out of the region at a young age or go and study abroad, don't realize that. So it's nice from you that you realize this opportunity that we have in the region. We have a huge population. We have the money that flows into the region. We have all the components that the US or Europe has. We just need the mentality or the help and pushing entrepreneurship in there. Why did you start and going the route of uh, angel investments? You didn't go and start the typical of starting a VC fund or a VC firm.
Yeah, that's a really good question. So first of all, when you go back 11 years when I started this, there were actually no VC firms in the region.
Oh wow.
Um,
Okay.
yeah, so there was zero VC firms in the region. So really starting to have a firm when you don't even know how to invest in this asset class would have been, yeah, I mean, I guess possible, but quite improbable. Um, so I think the decision at the time was very much to catalyze this space, to get started. You know, you can always find reasons not to do something, but I think Hosam and I and a few other like-minded people who kind of got together at the time just decided to give it a go with our own money as well. And there needs to be also an important backdrop to this, which is back then, this wasn't cool. Like what we were doing
Right.
was not cool. It was actually seen as being like silly and like, why don't you do what adults do and put your money in real estate or something like that. So we were seen as kind of the crazy ones a little bit, putting our money at risk and having sort of very patient capital. So we just felt that that was the right way to kind of contribute. There's a lot of different ways to contribute. So, you know, this is not really passing judgment on anybody else, but that was, you know, kind of my personal journey, and I haven't regretted it once. I learned so much from being an angel investor, and, you know, I'm delighted that that was my entry point into this wonderful world.
Okay. If we want to take a look and just compare being a kind of angel investor or being a VC firm, what are the some of the differences between them?
Yeah, there are some key differences. The first thing is that an angel investor invests their own money. And this actually is a very big difference from a VC that invests other people's money. So
Right.
if you're investing your own money, you can be quite flexible in terms of your investment thesis. You can also, you know, change your mind about things, you know, midway through something. And you take the full risk of that investment,
Right.
right? So you can sleep easy a little bit, knowing that it's your money, it's not somebody else's money. I think to be a VC, there is a big shift, and something I've gone through myself, which is when you start taking other people's money, apart from big legal words like fiduciary duty and things like that, which just basically means you have a higher level of let's say accountability,
Right.
because you are taking other people's money and you're investing it, and you're expected to really invest it professionally, and to try your best to make a return for them. So the way that you raise the money also is that you have a strategy, and you say, this is my strategy, this is how I'm different from other people in the market, give me that money, right? So you also then immediately from day one have constraints, which is that you cannot really go off strategy too
Right.
much. I mean,
Right.
there's sometimes are mechanisms where you can go back and ask for some fine tuning, but you can't start saying I'm going to invest in like tech startups and then end up being like a crypto fund, right? Because that's not why they give you the money, right? They
Right.
give you the money for something
For being a
specific.
tech
So
startup.
exactly, right? You can't just change and say, actually, I want to be a private equity or real estate investor or whatever, right? So I think that's really the key difference, and I think as a result of that structural foundational part about what an angel is versus what a VC is, it also means that the way that they invest is and how they're involved with startups is very different.
Okay. Here's something you mentioned too, some people would think that investing your own money puts more pressure on you because you might lose that money, but at the same time, it's more flexible. While you're investing other people's money, this is a great. There's a lot of pressure happening because you don't want to lose other people's money. You have this guilt on your shoulder. Okay, if I lose this money, it's other people's money, and it's kind of you have to balance what do you want to do. Do you want to raise other people's money? Do you want to use their money and have this balance? How did you think about that? Like, would you ever start an VC firm where you're investing people's money?
Yeah, no, actually, that's exactly what I've done in the last two
Okay,
years, right? So,
okay,
so I can tell you the difference, right? Like the psychology. The first thing is that when we started this journey 11 years ago, as I said, there was just nobody there,
right,
right? So we really had to learn a lot. We also had the privilege that a lot of people wanted to help us from outside of the region. So we had
okay,
people from the US and from Europe and from all corners of the earth trying to help us. So we're very grateful for that. So thank you if you're out there and you listen to this. We couldn't have come this way without you. Um, and the idea was just to learn about, okay, how do you invest? What's the
okay,
process, etc. And I guess one of the key things that you learn is that this is a pretty risky asset class. It's also a very long game. So this shouldn't be like your kid's education fund,
right,
right? Okay, so the kind of the rule of thumb is that this shouldn't really account for more than 5 to 10% of your savings.
right,
And there are rules in the US about who can and can't do angel investing, which is the accredited investor test,
right.
which means it's a back of the envelope kind of way of calculating whether you have sufficient wealth or income generation to be able to do this.
Okay,
And we actually applied this from day one when we built the Cairo Angels. Okay, so we really wanted to make sure that the people were not, they could afford to do this, right?
right. Yeah. Because at the end of the day, it's a long-term investment. Like you're putting this amount of money. Uh, most startup investments go to zero, and the others that don't, you're waiting 10, 15 years to get a return back on your investment. Is that right in general?
I mean, the hold period is long, right? I mean, the hold
Right,
period when we started was we don't know, right? Because there was still no ecosystem, right? So the hold period was, okay, if you look at like the US and Silicon Valley, maybe 5 years, right? But we
right,
knew that that was not realistic. At that time, probably it will take us 10 years. Um, and as the ecosystem has developed, that number has gotten shorter. Okay,
okay,
so I'd say that the hold period today is probably actually closer to 5 years,
okay,
sometimes shorter. I mean, we've had hold periods as short as 1 year.
Oh, really?
So,
And what
yeah.
happens there? Do they sell? Do they exit at this point
Yeah,
after
so
1 year?
a very common way of exiting today, especially for angels, not so much for VCs, and we can talk about the
Right.
difference there, is you can sell secondary. You know,
Okay.
if a round is oversubscribed, you know, you can sell on a secondary basis
Okay.
and realize a quicker return. You won't make the same multiples that you do if you hold on to your winners.
Right.
But you know, getting money back is a very big validator of your investment thesis. So
Okay.
my recommendation to people starting out is that if you have an opportunity to exit, at least take some money off the table to validate what you're doing. So yeah, so that's kind of the, you know, the way that we think about it as angels. For VC, it's a different kind of thing. I mean, you
Right.
know, this fiduciary duty thing I mentioned at the beginning is very serious. I think, I don't know where I read it, but I read from somebody that I really respect that when you take outside money, you should treat that money like it's your grandmother's pension.
Yes.
No? Okay. So you think twice, three times about, like, you know, have I done my homework? Did I really work hard to try to de-risk this as much as possible? You know, so that I can really utilize that money, you know, with the highest degree of trust.
Right.
Okay.
And
So yeah.
if you know Shamath Palihapitiya, he's a famous investor in the US, and he was talking one of his podcasts. He was talking about some of the money he's raised before was pension funds for cancer hospitals, schools, retirement. You don't want to lose this money.
No,
It's guilt on your shoulder.
no. No, actually, I think that what's more challenging also is that this sector, you have to, there is going to be a portion of write-offs,
Yes.
and there's going to be a portion of, you know, things that just barely make back their money, right? So it's not even just about that. It's about, like, when you're going into the investment, you've done everything you can to really study things and make sure that you have the right strategy to try to make back that money for the people that entrusted that their savings with you, right? So you know, it's you know, it's very different from putting your own money, because in the end of the day, you're only accountable to yourself, as opposed to in a VC where you're accountable to other people.
Right. Um, as an investor, how do you get deal flow? Especially how you spoke, you were early at the in the ecosystem back 11 years, and even now, like how do you get deal flow? How do you find startups?
Yeah, it really depends on how developed the market you are in, and that's, you know, the variance now is bigger than it has been before, because I think you know, maybe 11 years ago we were all starting at the same place,
Right.
but today, you know, if you look at some of the more developed markets like you know, Egypt, UAE, Saudi, and Nigeria, and then if you compare them to maybe some up and coming markets, you know, Algeria, for example, or you know, I think Ghana is a really hot story right now. You know, they're doing, it's very exciting in Ghana, Ethiopia, you know. So the story is a little bit different, right? So I think when we started, we just had to put the word out. You know, we're serious investors. We're going to be doing this professionally, and that also was not easy, you know, because I think there was a lot of education of people. Like, you know, people were like, oh, we want to help the youth, you know, like they're like, no, 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 this is not charity. Okay,
Right.
there's many great charities. This is a professional financial investment. This is not like youth support or whatever. Like, you know, this is actually a serious asset class, and to create an industry, you need to deal with this seriously. So and we also had to give comfort to the founders that they would be treated with, like, you know, respect, and we would do things, we have a process, and this builds trust. Okay. And this is basically how you build your brand. You build your brand as an organization. You also build your personal brand, right? Because it's a small community,
Right.
and basically once the word comes out and people come to pitch, you know, simply, are you responsive, right? If you're not
Right.
responsive, people are going to be like, well, you know, that person is not really responsive, right?
Okay.
You know, do they have a very clear investment thesis, right? Or are they like all over the place? You know, like, because if you're looking at like a real estate investment, but you're calling yourself an angel investor in tech, you're all over the shop.
Right.
right? And then, founders are going to be like, well, this person doesn't know what they're doing. Do I really want this person on my cap table? Yeah. So you really need to kind of like start somewhere. I would always recommend start with a group if it's available in your market, um, and learn and build your personal brand and really try to get yourself out there through thought leadership pieces, through investing, just creating a good buzz about yourself on solid foundations, right? I mean, you
Right.
need to be a good investor. If you're a good investor, you don't even need to talk too much. People will get to know that pretty quickly.
Okay. We spoke about how you get deal flow. We spoke about you started as an investor, and you've been in the game for so long. What are some difficulties or challenges investors have in the region, and how and these challenges prevent a lot of people from investing? How can we overcome these challenges?
I mean, there's a lot of challenges, right? The region has a lot of challenges, but these are, for me, I always say all of these challenges are opportunities,
Right.
right? So the VC industry is very interesting because you're kind of a middle person. So the founders are trying to build um, firms or
Right.
startups to solve problems, right? In a lot of different industries. Okay, so I mean, the sky's the limit, but happy to unpack any of those, as needed. The VC has to identify trends where they see, okay, clearly these solutions are going to be disruptive and are going to become really big firms and we need to back them. So I'm going to go to other sources of capital, convince them to give me money in a fund so that I could then invest in those founders so then they can solve the problem. So actually, the VC is an enabler.
Right.
You're not you're not the main you're not part of the main show. And actually, the really good or the VCs that I really aspire to be like and that I really respect, they know this and they don't lose sight of that, right? That you're an enabler. The main actor or actress are the founders, right? But you need to have kind of a vision about where are the problems, where are the solutions, how is the market going to look, and who's building what, and which horse do you back in this
Okay.
race.
Okay. That makes sense. Looking at the general picture in the world, we've seen VC funding or investing slow down in the past 6 months. Has the same happened in the MENA region?
Yes and no.
Okay.
So first of all, yes, there has been a slowdown in most of the developed markets, especially Silicon Valley, but same goes for like China, India, etc. Um, but it's not across the board. So
Right.
the way I like to talk about this correction, or whatever word you want to call it, in my opinion, it's a correction. It's a healthy
Right.
correction.
Yes.
I'll explain why a little bit, right? But you have the growth stage. Um, Definitely, there is a correction because the price, the valuations were just completely insane, unsustainable, insane. I mean, not tethered to reality, and money was cheap. I
Right.
mean, a lot of the central banks around the world were pumping so much money, it had to go somewhere, and this was the only place that was giving some sort of like long-term return.
Right.
Um, and there is a correlation between interest rates and
Uh,
basically, let's say, adventures capital
Right.
or like venture capital.
Okay.
Okay, those are kind of the same thing. So that's an area where there's clear correction. The mid stage, which is kind of Series A, Series B, there's a compression. I don't think that
Okay.
there's a correction. There's maybe more flat rounds, slightly down rounds. Maybe less. It's harder to raise, longer to raise, and in the early stage, much less affected. But let's say that rounds are taking longer to close,
Right.
but we're still seeing a lot of deals. Okay.
Okay.
And I think that because we're starting from a lower base in our part of the world, we actually have the lowest base out of all of the other regions globally.
Right.
So the low base effect means that we have been affected less because really the gap we need to make up is so big that there's still a lot of room to kind of go ahead. So if you look at like the stats for MENA, the story doesn't look great. But if
Right.
you look at the story for Africa, which is coming from a lower base, it's actually like they've bucked the trend. They're one of the few regions that have bucked the trend. And we kind of sit in the middle of those two, right? So we really try to differentiate MENA from Africa. There
Right.
are nuances, but generally speaking, we haven't been affected as much as the other areas of the world because we are really still at the beginning of the cycle. There's still
Right.
a long way to go for us.
And I had Humaira Khan on the show almost a month ago, and she works a lot with the hiring industry. Uh, and what we noticed too on that episode is that hiring didn't get affected in the MENA region as it did get affected in Europe and the US. And I think that goes back to a lot of stuff is that we're still at an early stage in the region. Investors are really sharp on what they're investing in, doing their due diligence. There's no cheap money going out. The money that's going out is earned before it goes out. Whereas in the US, there was a lot of this free money, cheap money going out, and a lot of money circulating in the system that wasn't present in the MENA region. And this is why in the MENA region, we didn't see a big of a bubble. Maybe is that true?
No, I think that, as I said, for me, what we're really seeing in the region, because we're coming from a low base
Right.
and we're still at the start of kind of like an explosive growth cycle. So I'm very, very bullish on the region in the next 10 years, right? I think, and you don't, it's not because like, I'm from the region. I mean, that's obviously I'm biased because of that, but, as I said, I'm taking outside money, so I need to be scientific about things. If you look at all of the other regions, if you go back 5, 7 years, that's when they had their inflection point, and there was a reason for that. And we're at that reason. And actually, usually the really smart investors, they can identify that there's opportunity when everybody is quite fearful, right? Everybody today is fearful, but I think it's never been a better time to invest
Right.
in startups.
Yeah.
Okay, and I can also defend that argument. It's not just kind of wishful thinking.
Right.
But so for kind of that low base effect, I think is the main reason why we haven't been as affected as other parts of the
Okay.
world.
When you say low, can you define low base effect?
Yeah, I can define it very easily. I mean, Africa last year was celebrating that they raised $5 billion in VC funding.
Okay.
Okay, there's 1 billion Africans out of the 7 billion we have on the planet. So that comes to about
1/7.
yeah, 1/7, which is somewhere the 15-16%
Right.
of the world. How much VC funding did we raise? 0.7%.
Wow. Okay.
0.7%, right? So that's like a drop in the ocean. I think New York City last year raised 50 billion.
Yeah.
So that's 10 times all of Africa.
Right.
Okay. So when you start putting things in those kind of like numerical terms, you start realizing like, yeah, sure, we can clap for each other that we had a good year last year, but there's like so much more growth potential to happen.
Right.
And the MENA region is the same. I can't remember the stats for MENA. I think it was 2-3 billion. Again, there's like about 400 million people across MENA. The numbers don't add up, right? So if you just believe in the power of that level of population, the demographics, it's a no-brainer, right?
Yeah.
It's gonna have to catch up because we're no different from Latin America or Southeast Asia
Right.
or any people, right? Unless you think that we're a different species, we're gonna catch up,
Yeah.
right? So that's kind of my conviction on that
Okay.
front.
A quick question here. Are founders in the region ready for that kind of growth?
100%,
Okay.
100% right. I mean, the best thing that happened in the last couple of years is the signaling in the market because of these exorbitant valuations.
Right.
Meant that a lot of talent that could have left their homes and gone to like other places in the world to seek a better life stayed, and some of those that stayed, instead of going into like investment banking or some other business like that, they decided actually to found businesses.
Right.
Now some of those people unfortunately didn't get like the top of the wave, but they didn't stop building, right?
Yeah.
I mean, they basically said like, I'm doing this, I'm gonna build something, and they're building some amazing companies right now.
Yes.
And the money is also there to support it. So even though maybe at the mid stage and late stage there's an impact, the money is still flowing. and it just takes a little bit longer today, and it's a lot more local, which I think is much better because that's
Okay.
patient capital. That's not capital that's gonna like hit and run, the
Right.
second like the story changes. So I think that I've never seen better talent building things than today
Okay.
in the region.
Ali, what's your criteria for investing? What's your thesis? And you have different funds. Is your thesis across all these funds or across all these investments the same? Does it change? What's your general thesis or criteria for investing?
Yeah, so just to clarify, I have one fund,
Right.
but I'm also involved as an angel investor with a few other organizations.
Okay.
I'm happy to talk about our first fund, which we closed actually last month. And basically, our investment thesis is we invest in the Middle East and Africa, early stage, pre-seed, seed,
Okay.
um, in tech and tech-enabled businesses that have the potential for explosive growth and are solving essential problems.
Okay.
That's it. Okay, it's a very short thesis, but it really kind of provides a north star for us in what we do and why we wake up every day and look at on startups.
So if I come to you and I don't have an MVP, I'm I don't have traction. Do you invest in me, or should I have an MVP and should I be post traction?
Really depends.
Okay.
So we've just closed two pre-seed deals, and the quality of the team building is just phenomenal. Okay,
Okay.
like these are, I don't want to use the names because it, become quite obvious. But I think if
Right.
you look at, there's a lot of PayPal mafia like
Right.
groups in the region, and there's a reason why kind of people coming out of those initial success stories are pretty good because they've kind of seen the cycle maybe as middle management or kind of lower down the pecking
Right.
order. They got battle hardened. They might have tried a few other things and now they're building things, and that generation I think today is really exceptional. So when those people they knock on my door, I couldn't be happier. I've
Okay.
Some of those conversations have started as not just idea, it's actually like, Ali, I want to have breakfast for you. I think I'm doing this crazy thing. Can you help me? Like, am I crazy? Should I be doing
Okay.
this? And I'm like, and then, either I say, actually, you are crazy. Don't do it. Okay. Okay. Or I say, no, that's the right crazy. But now let's try and validate whether it can work. And one of the ones that we just did with it, which I can't disclose just yet, but
Okay.
the record is closed. Literally, that's how it started, right? I was the first conversation. There was 9 months of discussions with the regulators, customers, etc. Then we helped them to actually, build the company from scratch, to close the round, and so on. So for me, this is exactly the sort of firm that I'm building, that we can
Okay.
help people from that stage. Now, that doesn't apply to everybody.
Mhm.
In some cases where maybe the business model is a bit riskier and maybe the founder doesn't have the track record, they might need to go the extra mile
Right.
uh, to demonstrate that what they've built can have validation in the market.
Okay.
Okay. So, it's not a one size fits all, but what I can say is that there's enough credit in the bank today for enough founders where pre-seed has become a very, very active space
Okay.
in the region and a very exciting space.
Um, the Adam Newman story at WeWork, a lot of people criticize how he went again and raised another fund, although everything that happened at WeWork. But if we look at WeWork right now, WeWork is a $4 billion company, and Newman helped create that. So when he went to get another investment, he already created something of great value, and that's why he was able to raise another huge amount of money for his next venture. I think being part of a mafia, building something before and coming to raise another investment makes it easier. Is that true?
So actually, that's a really good story. I think the Adam Newman story or the WeWork story, before we get on to his latest venture, for me is really about governance.
Right.
And I know this sounds like a bit of a boring thing, like people want to hear like a spicy, action-thrilled series, but Adam Newman was not able to do what he did at WeWork without poor governance.
Right.
And basically, investors said, do what you want. go for your surfing trips in, whatever, wherever he was going every weekend, and treat this as your fiefdom, because you're genius and, you have free reign, right? So actually the ecosystem and the governance of the investors is what led down the company.
Right.
Okay. So Adam Newman had a vision. He had a vision that was validated in the market
Yes.
because of what he built around the world. This is something that is a legacy, and a proven legacy.
He
It's
created
sad.
an asset. He created an asset class.
He
Everyone
created an
thinks,
asset
yeah,
class. Exactly. Okay. He created an asset class. And so that's something that, is in the credit part. The fact that he's, a little bit crazy, and that there was no checks and balances, which is exactly what governance is supposed to be about. For me, it's more about the investors. And we don't question enough about the investors and the role in this story.
Right. I mean, at some point, SoftBank came and gave him all this money and be like, okay, this is your money, go do whatever you want. There was no board. There wasn't.
Take more money.
Yeah. You're part of a lot of organizations, Cairo Angel Syndicate Fund, Cairo Angels, Saudi Angel Investors, Angel Group, a lot of stuff. I mean, I could keep on counting and counting. Just can you tell us like a little bit of how each started, how big was each, like how we're making investment decisions in it? Just a couple of examples you have in your mind.
Yeah. So I just have to clarify also, like now 99% of my time is focused on the fund, right?
Okay.
Because
Yep.
actually VC is very hard.
Yes.
And doing this is actually, it's a lot of work. It's extremely rewarding, but it's a lot of work. So, but the build up to this, I've always been a big believer that you really need to learn. And there's two ways of learning. There's learning, theory, and there's learning practice.
Right.
So for me, I love to read a lot of books. So, I've always been reading books, doing courses, doing these kind of like mini course stuff, retreats, blah, 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 blah. But also you learn a lot by just investing, So, first and foremost, my investment was through the Cairo Angels. Then it was, then I was a founding member and member of the ICF Saudi Angel Investors, because I believe that the Saudi ecosystem is just incredible. It's so impressive what they've done in such a short period of time. And Afropreneurs is another group that I'm part of, because I love the community that has been built by Idris, who's a good friend.
Right.
And he's built an amazing community of investors that invest all across Africa and beyond, actually. So he also invests in African founders outside of Africa. So he's really done something very spectacular there. I also, by the way, invest individually in Canada. I'm Egyptian Canadian.
Okay.
I still, the Canada ecosystem is very, very interesting. I'm also a limited partner in a number of funds.
Okay.
And I learned so much from all of these experiences, in addition to making good returns, right? So I got double returns, which is financial returns, plus, for me, and this is the most valuable thing in the world, is education. I got to learn on the job, who's doing what, how are they doing it, what's their strategy, and how I can put all of this stuff into what I'm doing today.
And the education part is really important. Jason Calacanis is one of the most famous angel investors, and in his book and his philosophy of investing, he always tells someone who wants to get into investing, let's say you have $100,000, chop this $100,000 into $5,000, $10,000 check, and go invest in like 10, 15 startups. You'll learn the process, you learn how to do your due diligence, you understand more of the market, and you build your network, and that could take you a higher step up. And I think this is what you did throughout your career.
100%. Actually, I forgot to mention that I am a member of Jason Calacanis' syndicate, and I'm also an investor in his.
Oh, wow.
Yeah. So yeah, for people that haven't read his book, Angel, it's a very good book. I usually recommend. It's one of the 2 or 3 recommended books that we give for everybody starting in the angel investment space. And one of the things that I've always tried to do is to democratize access to this asset class, by trying to allow people to write smaller checks into more companies. One of the biggest challenges when I started is that, the minimum ticket, that to make things work was $5,000, $10,000, which is a lot of money, right?
Yeah.
Like, it's not a small amount of money, but I would much rather than instead of like, people putting maybe $10,000, $20,000 a year into one or two companies, I'd rather they put that 20,000 into maybe like 20 companies, right?
Right.
Because they'll learn a lot from that. And actually that diversification will give them a higher chance of making returns on a portfolio basis.
Okay. Uh, Throughout your career in investing, and you're deep in the region, you invested in Saudi, in Egypt, and in Africa. What are some industries that are still untapped in the Middle East and Africa? Investors haven't gone and invested a lot of them, and founders haven't gone and built in these industries.
There's a lot. I mean, to be honest with you, like, it's very hard to say the word untapped
Okay.
because there's very few things that are like off the radar completely. I mean, even if you think about today, what's trending in terms of like the more futuristic investments,
Right.
it's Web3 and metaverse. So is that untapped?
No.
You know, I don't think it's untapped, right? Another area that is very like space exploration,
Right.
untapped. No, I mean, there's an index fund on the S&P 500,
Yeah.
to invest in
Invest.
space. Yeah. So I guess I would say like, less popular is maybe like the word that I would prefer to use. So I think if you look at it statistically, there's a very big disposition to fintech. And the reason for that is because a lot of talent is going into building fintech,
Okay.
right? And in Africa, it's a no-brainer. I mean,
Yes.
there's 75% on average are unbanked,
Yes.
not even poorly banked, unbanked, right? So the size of the problem is just enormous. And finance is one of those things that's very it touches everybody's lives. So that's a big problem, and a lot of talent has gone into that. It doesn't mean that there aren't other problems that aren't being looked at. I'm a very big believer in education. I've probably said the word a few times today. So ed tech is something that I've always been interested in. I'm on record as saying that that's an area that we like a lot. And it's a big problem that if you can create strong solutions, there's a lot of scale that you can achieve there. So I think
Right.
that's an area that I like a lot. Another area that's kind of up and coming that is a trend that we're focused on as a firm is future of work. I
Okay.
think the reality is that today people don't just put money as the main driver for where they want to work. There's a lot of other drivers, and that's a very interesting philosophical kind of change that's happening, and it's global. It's not just like in Silicon Valley or whatever. And the reality is that this presents a very big opportunity across the Middle East and Africa. If you look at a lot of countries in the Middle East and Africa, there's a lot of centralization of wealth in
Yes.
sort of one or two major cities. So people not from those cities have to gravitate towards those cities
Right.
to create wealth. And that can, mean a lot of personal sacrifices. It can mean also a lot of talent not doing that choice, and means that the society is not benefiting from the talent because they didn't move to those centers.
Right.
And if you take that one step further, the reason why we have brain drain is because some talent also then leaves the region entirely and has to go, or feels they have to go to, like, London, New York, so, the usual kind of like centers, whether of finance or technology, to be able to have a better life and to really excel. Today, that's changing. I think today, there's a reason why, Airbnb, kind of said, we're going to support working from anywhere.
Yeah.
And they weren't doing that because they're like, hippies, like they were doing that because they thought about it a long time.
Yeah.
They probably have data that nobody else has because that's their business. And they said, you know what, don't fight the tide, go with the tide, right? So, and we think that's a very, very strong trend. And it's going to mean, a lot of different things in our society going forward. And I think that's not yet fully realized in my view.
Yeah, I'm a big believer of remote work. I think that could give access to a lot of talent around the world. Companies, Facebook could hire someone in Jordan, could hire someone in Egypt, could hire someone in Lebanon, and they could be much and talent level at much higher talent than people in the US sometimes, maybe sometimes at cheaper salary, but at the same time, this cheaper salary is really helpful for that talent in Lebanon, in Egypt, in Jordan to have a comfortable living.
100%. And that's happening already, by the way.
Right.
Yeah.
Yeah, and I've seen an increase in that since COVID. I mean, the different founders I've spoken to, just being on Twitter and LinkedIn, I've seen that happen like a lot since COVID started. Uh, I want to go out and speak about Egypt in general, uh, and how that has affected the investment ecosystem. We've seen devaluation of the currency in the past 2 months now, higher interest rate, inflation in Egypt. The general microeconomic in Egypt has been different. How has that affected investment and startups?
Yeah, so there's kind of there's two sides to this, right? Which is that most of the investment going into VC that invests in Egypt is not actually coming from Egypt.
Okay.
Okay. So if you look at most of the VC firms that we have, either from Egypt or that are focused on Egypt, they raise money from all over the world. A lot of that actually is development finance, institutional money, which obviously there's been a bit of a pullback from some segments that invest because of the macroeconomic picture. But as a general rule, they're still going ahead, and the Egypt story hasn't impacted their appetite for putting money into VC.
Okay.
You've probably seen recently there was a few funds that announced closing, and obviously that's also a signaling to
Yeah.
the market there is appetite.
Okay.
And the reason for that is very simple. Just the last part on this is because VC is it's a 10-year game. You're not
Right.
investing today to make returns today. You're investing today to make returns in 6, 7, 8 years over
Right.
the span of years, right? So if you look at the startups that we're investing in, they're not in a vacuum, right? So if you have products that are being impacted because of the higher inflation, because of the difficulty of importing, because of the hard currency kind of challenges, and so on and so forth, your product is a product, right? Whether it's a digital product or like a tangible product, consumer habits will impact whether people can buy that product or not. Now, the interesting thing, and our conviction has always been that when belts are getting tighter, there is a burning platform to switch to digital solutions
Right.
that save money.
Yeah.
Right? Okay. If you're not on a burning platform, you're like, well, I've always done it this way my whole life. Why would I use, X app or whatever? But if X app is going to save you 30%, okay, and your budget suddenly is 30% less, you're gonna have a much bigger motivation to
Yeah.
switch to digital product, right? So just because you've been doing something forever, people are very savvy, in this part of the world. If it's gonna make them savings and there's a burning platform, they will switch. And that's a trend that has been proven over the last 10, 15 years. So our view is that even though the macroeconomic picture right now is challenging, it's difficult, for a lot of digital products, it might be a tailwind. And we specifically look at opportunities where we de-risk some of those macroeconomic issues, or in fact, those might be tailwind issues for us. So we're not worried because of that. We just need to make sure that we pick our winners, in an intelligent way.
That makes sense. I have one question, and I think that trended on LinkedIn and Twitter and the news for the past month now. What happened at Cap? I'm gonna spell it wrong. Is it Capiter? How do you say? Okay. What happened?
Yeah, so I can only tell you the story from the outside. I have to just, even though I've commented on this a little bit, I'm not an insider, so I'm not an investor.
Right.
I have no personal relationship with the founders. I know a lot of the investors in the opportunity,
Right.
but so I'm really an observer, market observer in this case, with no inside information. But the way I view the situation is as follows, right? They raised $33 million at a Series A last October, I think. And any company of that size in a nascent market, when things don't go right, people are going to have a lot of questions.
Right.
Okay? Because, $33 million in like
That's a
Silicon
lot.
Valley.
Is a little. Yeah.
It's nothing.
Yeah.
It's not even like, it doesn't even make the news, right? In somewhere like Egypt, especially when people convert that into like Egyptian pounds, it's a really big number, right? So I think there's a psychological element of like, oh my God, like surely there must be something wrong if $33 million has just disappeared. And the reality is that in startups, the name of the game is that you're going to have write-offs. You're going to, you cannot have Googles and Facebooks and all of these successful technology companies without having in front of them hundreds of failures, some of them epic failures, right? So we need to really kind of look at Capiter as follows, right? They are running into very severe difficulties. This is a result of a number of different factors, including the business that they're in, the business model that they adopted, and the fact that there is a correction in the market, and Egypt specifically is going through some issues that impacted supply chains and so on. But the really bigger question is as follows. Is there a fraud or is there no fraud? If there's any fraud, then we have to also have confidence that we have laws like every other country that deals with that. Okay. And by the way, fraud is not something that only happens in this part of the world. I mean, it happens everywhere, right?
I mean, in the US, we just saw Theranos and we've seen a lot of examples. Before that, it was a electric truck company. I forgot the name now, but the founder was committing fraud. So it's normal part of the ecosystem. We don't want it, but it's normal part of the ecosystem that we have to find solutions for.
Yeah, and just because there's one person that commits a fraud doesn't mean everybody else is a thief.
Yes, that's true.
Right? This is the mentality we need to change to be successful, right? So I think that there's a lot of lessons that are coming out of Capiter. One is that we need to be a bit patient with the story. Superficial light touch journalism that doesn't do their homework is not helping anybody. It's just inciting, it's provoking actually like negative sentiment,
right?
Which is irresponsible in my opinion. We need to wait and see what the story is going to be like. The board have not helped themselves at all because I mean, I know a lot of people on the board and I have a lot of respect for them. But the fact of the matter is that, not communicating since the very first press release 3 weeks ago from the day of this recording is just, I mean, that's an eternity when it comes to communication, right? And I think that, as somebody that's a lawyer, I know that maybe they were told by their lawyers, don't comment until, but you cannot have 3 weeks, right? What you need to say to your lawyers is that you need to give me something to say within a week maximum.
Or maybe they were going with a strategy that they're just not going to comment and let the wave go down and just move on.
That is I mean, again, that in my opinion, that's a very, very, very poor communication strategy, and it's very bad crisis management, especially for the different stakeholders related to the company. I mean, if all of those people are board members, they have a responsibility towards the company. If the company can still survive, they're not helping it by not communicating. Because what is it saying to the market? What is it saying to their counterparties? What is it saying to the employees? It's a very bad message. So I think that there's another big lesson learned here, which is crisis management. How do you deal with that? And the last thing, which I have to also say, is my first concern always goes to the employees. There are stories that I've heard from reliable sources that they have not been paid in a number of months.
Oh, okay.
And that's very sad. And I think, again, we might want to blame, the easy person to blame is the founders. But actually, this is also a board responsibility. And honestly, this is also like a legal responsibility.
Right.
We have laws in Egypt for like social insurance and things like that. The whole point of social insurance is actually for circumstances like that.
Right.
Okay. The fact of the matter is that that area needs reform. Again, I'm not blaming anybody. This is not a whole, the policies there need a lot of change so that people pay the right social insurance contributions. So when this happens, they're covered.
Right.
Okay. Yeah. So it's not, the easy answer is always like, who's the bad person?
There's
Who's the bad
there's no bad person. There's lessons that have to be learned from this type of crisis happening. You learn how to better board, you learn how to be a better founder, you learn how to be a better employee, you learn what regulations need to change, and you come up with the lessons that you need to change to have a better ecosystem in the future. I think that's what we should think about. And something in the mentality of people who are outside of the ecosystem, seeing $33 million disappear in a way. Or before that, I heard, because I watch Egypt closely, there was Amar villas in this that were being sold for 100 million Egyptian pound, and people are asking, oh, why are they sold for that much? And when I had Mahmoud Al Sabungi, founder of Buyut, on here, he explained really well why that happened for the villas, that because they're investments. These villas are being sold again for 200 or 300 Egyptian pound, and people are making money out of them. But people outside of the ecosystem don't think about it in investment way or ecosystem way, which I think we need more education to the public about the ecosystem and what's happening.
100%. And look, there's always a discussion when you see like headline numbers that are very big, and you have a lot of people that are really, finding it very difficult on a day-to-day basis to make ends meet. So like there needs to be a bigger social discussion about distribution of wealth. And this is not an Egypt only issue, right? This is around the world.
Yeah, even in the US, you hear such conversations.
100% in the US. If you look at, I think Peter Thiel, he has a famous kind of like statement, which is actually one of the curses of Silicon Valley is technology, because it meant creating such a big disparity in between, how the rich or the haves and the have-nots live, right? And if you look at the housing crisis, for example, in Silicon Valley, it's a tragedy, yes. Right? So how can this be? Like somewhere where you have so much wealth and so much. So I guess this is more of a societal discussion, but it shouldn't become toxic. Okay, like I always believe, like let's be constructive, and let's not also kill people taking risk. We need to take risk to build successful, globally competitive firms.
Yes.
Okay. So my message is don't really get people to be afraid of doing this by making superficial statements and kind of rushing to judgment.
Ali, I have one last question. And since you're a lawyer, you're an investor, what are some of the regulations in Egypt that you think we need to help more investment coming in to better the ecosystem? If you were in a government position, what laws would you give out to help investors come into Egypt and more startups being built?
Honestly, the answer is the same as for any other business, right? So it's not going to be like, there's a lot of papers that have been done about this. And, my honest opinion is like, if you make Egypt a better place to do business generally,
right,
then it will be a better place to do business for technology companies. Okay. The problems are kind of similar to many other emerging and frontier markets. Less bureaucracy, make things easier to build in terms of legalities and so on. I think in the UK you can do a company online in 5 minutes.
Yeah.
The US is probably the same. In the US you can probably open a company and then open a corporate account and a credit card.
Yeah.
In the same day.
Yeah, or in a week maximum.
In a week, yeah. Sure, right? Okay. For us, we can't even we can't issue a corporate credit card unless you're basically like PepsiCo or something, right? Like it's and so these are all very simple things that we can solve that can make the ease of doing business much easier. So licensing, bureaucracy, honestly, the labor market, I know this is going to sound a bit ironic considering what I was saying about Capiter. I'm a big believer in more dynamic labor markets,
right?
Because you can then allow people to move jobs and to have a more dynamic labor market. When you create very pro-employee contracts without thinking about the labor market in a deeper way, you create kind of like entrenchment and a lack of incentive to change jobs for their own reasons.
Right.
Okay. And there's the Europeans, I maybe have a better balance than other places where they use insurance as a way to cover the bad days, but
Right.
also create a more dynamic employment market. Okay. So I think that that's something again that Egypt and many other countries should really think about. But generally speaking, it's ease of doing business. You solve
Okay.
that, you make things better for
Yeah.
investment.
Hari, that was a great episode. We went into really deep discussions, understanding investments, the region, where are we at right now. I was really happy to have this full hour with you and learn a lot from someone who's been doing it for a long time. Do you have any plug? Where could people follow more of what you're doing? If someone wants is raising capital, how should they reach out to you? Feel free to put any plugs in.
No, thanks. Look, I mean, we are very active on our social media channels, personally and as an organization. So please reach out. We're here, we're active, we're part of the community. So give us a read, give us a follow, and get in touch. But I also just wanted to thank you so much also for having me on this episode. I've really enjoyed chatting together, and look forward to maybe doing so again soon.
Yes, let's do it in one more year. Let me have you as a guest again for sure.
Wonderful. It's been my
Thank
pleasure.
you, Ali.